Let's come home now to some domestic issues, some good news on the economic front today. Year-over-year inflation reaching its lowest level in more than 3 years. That was in the month of July. Prices rose 2.9%, falling below that 3% mark for the first time since 2021. So we're watching with great eyes right now on how the markets are reacting to this news. Looking live at the big board right now, we're in positive territory. Still not gangbusters, but at least we are in positive territory. CBS News 24/7 will watch that throughout the afternoon. We'll bring you how the market closed on this broadcast. President Biden owning this as a win. He's saying this report shows progress in fighting inflation and lowering costs for American households. So let's bring in Kristin Myers, editor-in-chief for ETF.com. Okay, so prices didn't rise by that 3% mark since 2021. We got that, but they still rose 2.9%. So is this a win for President Biden or a win for the consumer?
I would definitely call this more a win for the American consumer. Look, we are in an election year, so it doesn't surprise me, of course, that President Biden would kind of take this cooler than expected inflation print really as a victory for himself and for the Democratic Party. But in reality, I would actually say that this is a win for the Federal Reserve, which has honestly kept these really high interest rates that hiked rates over and over again, that really kind of put American consumers and also investors in this kind of a bit of a crunch and a little bit of an economic pain. But this is exactly the reason why they did that. They wanted to see those inflation numbers come down. And now investors can definitely cheer that in September that we're going to be getting a rate cut. And for American consumers, anyone that's watching, we can all definitely cheer that at least when we go to the grocery store, when we go purchase things at the mall or at any stores, it is going to cost us less money. Our dollar is going to go further. And so this is something that we're seeing, that economic pain is easing. And I think it's something that we can all be really happy for.
We know that the Feds will be meeting in Jackson Hole, Wyoming, a billionaire's enclave, in the month of September. Any chance that they could meet any sooner and we could see rates come down? That's the first part of my question. What are you hearing about how rates might come down? We're hearing 0.25%, maybe even 0.5%. Is that true?
Yeah, so that has really been the big question. It is really all but presumed like an 100% rate right now that we are definitely going to be getting a rate cut. But as you're mentioning, how big of a rate cut are we going to get has really been the main question. Now, just last week, we saw a lot of volatility in the markets, and we saw traders really anticipating that we were going to get a super-sized rate cut. That's a 50 basis point rate cut. We've now seen that hope really kind of back off. It is really now presumed about 60% that we're going to be getting a 25 basis point cut. It's going to happen in September. There's really no reason for the Fed to kind of give us a rate cut any sooner. We're not in an economic emergency right now, even though it might feel that way if you go and look at your investment portfolio. Right. But the economy is still holding on pretty strong right now. So September is the time that we're going to be expecting that rate cut.
Kristin, you know what I'm excited about? Maybe paying less when I check out at the register for dog food. We did a little intelligence, and we know you have a dog sitting at your feet. We have to bring that dog to our viewers on the stream, coast to coast and streaming worldwide. Show us your dog, if you will.
You want to see my dog? He's here. He's sleeping right now. I'm gonna wake him up, and he's gonna try to join in on the broadcast. But yes, he is here next to me right now. He's also excited because this really means cheaper prices means that he gets more treats. So I get to spoil him a little bit more.
All right. Thank you so much. Always making us smarter, Kristin.